Hey everybody, Mike Meena here at Augusta Financial, and welcome to the Real Estate Beat. I'm here with John Augusta. John Augusta sitting in for Amy Atkins. John, tell us a little about yourself.
Yes, my name really is John Augusta, and I've been here with Mike for a little over 2 years and just love learning from him and learning everything there is about the loan business.
That's exciting. Thanks for sitting in for Amy. You look very pretty today. Your hair looks great.
Thank you. I did a little extra work on it today for you.
Gosh, it looks special. So you have some questions for me today, right?
Yeah, so like I said, I'm learning about the loan business, and the buzz on the street recently has been the FHA loan. I hear that they are dropping the PMI around March 20th. What does that look like for buyers?
Well, they're dropping the rate of the PMI. They're not dropping the PMI altogether. That would be fantastic now, wouldn't it?
Yeah.
I swear, if we had no PMI on FHA loans. So FHA dropped their PMI from 0.85% on their normal loans under 625,500 to 0.55%. So they dropped it 30 basis points. That's great. And then loans from 625.5 to 724.6 or 27.64, I always forget that stinking number, it's right on my desk, are now going to be that 0.55 also. And then it jumps up 30 bips after that to 0.850%. But it's good. It's going to help the rate. It's going to probably save a lot of people $100, $150, $200 a month if they're having to get an FHA loan. So it makes FHA more competitive. I wouldn't say it now becomes the loan. It just makes FHA a little bit more competitive in the market. So FHA does a lot of great things. What other questions?
You said that it makes FHA more competitive. So if someone has a low credit score or bankruptcy, homeownership seems like a far out dream. Does the FHA play into that and help that person?
Yeah, so FHA doesn't really. So if you're looking at a conventional loan and you have a 740 credit score, that's your premium tier right now. If you have a 720, your rate goes up slightly. If you have a 680, your rate goes up probably another 0.25%. If you have a 660, it probably goes up another 0.25%. With FHA, if you have a 740 score or you have a 660 score, your rate's pretty much the same thing. So FHA is really helpful that way. Also, conventional lending cuts off at a 620 credit score, and FHA really doesn't have a limit. You know, when you're under 600, you can't have any late payments in the last 12 months to qualify. So, but yeah, I mean, you could have a 550 credit score and feasibly buy with an FHA loan.
Wow, that's awesome. That allows so many more people to experience homeownership. Where are the issues, though, that you see with an FHA loan?
Well, FHA has some issues and some positives and some negatives. FHA charges an upfront mortgage insurance premium of 1.75%. Not every condo project you're going to be able to do FHA financing in. FHA wants condo approvals on them. Aside from that, you know, there's really nothing bad about it. FHA does some good things too. One of the things is they'll do loans without any credit scores. So we can use alternate documentation to qualify a buyer. You know, you talked about bankruptcy a little earlier. If you do a Chapter 13 or Chapter 11, excuse me, Chapter 13. Yes, we're going to go back to Chapter 13. This guy's getting old. Let's just remember. Chapter 13 bankruptcy, you pay on that for 1 year. You can get an FHA loan with court approval. If you're discharged from it, you're getting it without court approval. Conventional lenders would require discharge of 2 years after your Chapter 13 bankruptcy. So FHA has a lot of good things. The negative is they still have that upfront mortgage insurance premium. Another positive, though, is they don't charge an extra rate like conventional lenders do for a low down payment on a condo or townhouse.
That's awesome. And with all these differences with FHA, there's the upfront, there's the PMI. Is there differences in how they're underwritten?
No, I mean, really, if you're qualifying based on your credit score and everything like that, everything's good. FHA goes to a 56.99% back-end debt ratio. That's with all of your bills, principal, interest, taxes, insurance, and then all your monthly payments. Where typically on a conventional loan, you're only going to about 45%. So it is a fantastic way to qualify.
What about manual underwriting?
Manual, we like manuals. Well, so we're going to use alternate trade lines. That reminds me of a funny sign. I'll tell you about this afterwards. But manual will get alternate trade lines. So your cell phone bill, your what other bills do you have? Utility bills, your car payment that you're making to your mom. All of those things can be used part of manual underwrite. So that would help you get qualified. The debt ratios are lower based on what you're doing, down payment, everything like that. But it is definitely a great product that they're able to do.
That's awesome. So if I'm saving a couple $100s a month now with the lowered PMI rate, does that increase my purchasing power, or do I still stay at the same place?
No, it increases your purchasing power for sure. So I think that that's important to know. I mean, what is that saving you? 30 bips on a $600,000 loan. It's $180 a month. So maybe you qualify for another 25 grand. It doesn't make it like, oh my God, I saw a guy do a video the other day and I had to laugh. He goes, oh, it's $600 lower a month. No, you're lying through your teeth, but it's okay. I know everybody's a little desperate for business, but we don't need to lie to you and then we find out at the end of the day that it's not the truth. What it is it's a little bit of savings, not a huge savings, but it's great. It puts them back in the market. It makes them more competitive. Looks like you're out of things to say.
It's rare for me, but I am.
Wow, that's special. I want to say thanks for coming out here. We wanted to try John out here at the real estate beat. We won't bring him back. You know that, right? Is that okay?
Yes.
John, you want to sign off for us?
On behalf of Mike, Meena, and the real estate beat, this is John Augusta, and we'll see you next time.
Yeah, thanks guys. Thanks for coming, and let me know if you need anything.